Hello fellow option traders, this is Jeff. I'm going to tell you a story about why, or at least one good reason why, when you hit 80% of your expected profit on short-term credit spreads, it's a good idea to get out. Priceline is the example that I'm going to use. It's a real live example. It actually happened to me. And if I had done the 80%, I would have ended up with more profit than what I did finally end up with, and it was kind of a scary day, and I'll show you at the end of the day. It was really kind of cool, actually. This is going to be a short video. I have right now already have on-demand set up, and I have it paused. I entered this trade about 13:11, so let's go ahead and start this thing moving. About 13:11 on 7/24, as you can see right up here. And it was a successful trade. And what I was looking at was a bear call. If we take a quick look at the chart, let's go here to the chart. You can see that the stochastic is giving me showing that it's overbought and that it's probably going to move down. It's in a downtrend. Everything's looking pretty good. It's in a downtrend. The stock opened, gapped up a little bit in the morning, and it actually pulled back over here around 12 o'clock or so. It actually pulled back, and that was on my watch list for the day. So I said, okay, I'm going to jump in. And what I did was 685. I have it marked here as I want it below this line. So the down arrow from 685 anywhere down below that would be fine with me. So let's go back here. I actually paid, or actually collected $1.25 on this particular trade at 13:11. So I'll speed this up a little bit just to try to get it up there. There it is, $1.25. So let's create a duplicate order for $1.25, and we'll send it. Do I have 4 of them down there? No, I need 4 of them. I need 4. Because that's how many I did at that time. And then we'll just wait for it to hit our $1.25. And it did. Well, we got $1.27 on it, actually, a little bit more. All right, so next thing we're going to do is we're going to jump ahead a day. Actually got out of this thing on Friday, the 27th. And that was expiration day for this weekly option. And I was lost a few fingernails in the process on this one. All right, let's go up to the 25th at about 1 o'clock in the afternoon. Now let's see where we are with this. Priceline. Let's take a look at the chart, because charts always come back faster. So it moved down considerably that day. 80% on this trade would be about 27 cents. So that would be what we would be looking for the actual value on this. And that's would have been about a $400 profit. So if we look at this right now and we say analyze closing the trade, we would be able to buy it up back for 10 cents, which would be a lot more than the 80% if I had gotten out. So as you can see down here, if I want to buy it back, it's now 10 cents. So I got $1.27 for it. I buy it back for 10 cents, so that's $1.17. So let me just do some quick math here. Times 400. That equals a $468 profit, which is pretty much what you're seeing when we go over to the monitor tab. All right, $468. Get out of it now. Everything's cool. Let's go down to normal time here. So, being, I guess, probably a little dumb and a little greedy. Greed is not good. I don't care what Mr. Wall Street says. Greed is not good. Let's take a look at Friday. And this is going to be pretty darn interesting. Let's go to, I actually exited this trade at 3 o'clock, so that would be 15. And let's just make it, actually 14, 55. Let's jump over to the chart. So now you can see I went from this huge profit a couple of days before to now, and I'm like, I'm freaking out here. Are we paused? Yeah, let's speed her up. Speed her up. All right. And I'm freaking out here. And this is what I'm sitting here in the afternoon. And it just so happened that I was sure that this was going to expire out of the money and I was going to be able to keep everything. I wasn't even home that day. Just so happened I had to come home, and believe it or not, my dog was over at my daughter's house, and she's on a special diet, so I had to come over and get food for her. And I just happened to bring this up, and I went, "Oh my God, what the heck is going on here? What? It went up $49. Do you see this? You see this? It goes up $49. Look at that. In one day, $49. Oh my God. So, $50 now. Jeff, what are you going to do? What are you going to do? Oh my gosh, is this going to, by the end of the day, is it going to expire in the money? And I'm going to take max loss after almost having a max win? Priceline has done this to me several times before. Okay, so let's go up to the close. We'll go to 15. How about 1550? And we'll jump over to that chart. Oh, look at this. Oh, man. It's right there. It's right at my short. Right 1685.9. Is the market out to get me? No, the market wanted to give me everything it possibly could 2 days before, even 3 days, even yesterday. I would have been able to, almost get so close to max profit that it would have been ridiculous. 685.21, 685.04. Now I sold right around here. I mean, I bought it back right around here sometime. What did I say? I said I bought it back at 1503. So this is 1500 right here. So I bought it back somewhere in this candle. And I continue to watch it. I'm going, oh man, I'm so glad I got out of there because it's going to expire in the money, and I would have taken almost max loss. And oh my God, or I would have taken max loss. But in the end, it did actually expire out of the money, but it was so close. It was so close. So folks, lesson learned. Just make sure this is about what I got out of it. $200 and some is what I ended up getting out of it. I'll just pause it here. That's what I ended up with. I ended up with a nice profit, but it could have been a whole heck of a lot better. So now I look at what my 80% is on my credit spreads, especially the short-term ones, the ones that are on the weeklies, and I put in a good till cancel order. And let me show you quickly how you do that in Thinkorswim. all you have to do is just highlight your two positions here, right click and say create closing order, and say you want to buy these back. It's very simple. You just go over here and say good till cancel, and then you figure, well, what's 80% or what's 20%? So $1.25 times 0.2 ends up being 25 cents. So that, if I would have had a good till cancel order in, I would have closed this the very next day for 80% of my expected profit. And I would have been freaking out and losing some fingernails on that Friday afternoon. So keep that in mind, the 80% rule. Hopefully this helps everybody. And that's all you have to do. If you wanted a quarter here, put 0.25 in there, and just send her off and get out of it and reduce your risk early. All right, everybody, thank you very much for watching, and happy trading.